Welcome to the Olsen video update. I was recently asked to give my take on why the current economic crisis happened. Now we know the standard answer. The standard answer is bankers were too greedy and just were concerned to earn high bonuses. And they had given out mortgages without thinking. So let's understand what happens. So when you yourself buy a house, you have to put up equity and get a first, possibly a second and a third mortgage. If the house that you buy loses in value, your equity is first at risk. If the house loses in value even more than the equity that you had put in, it's the third mortgage which is then at risk, and then the second and the least risky is the first mortgage. So the idea is that whoever gave you the mortgage, the first mortgage is highly protected and will not lose its assets. Now, what did the banks do? They took these many mortgages which they had kind of sold to the customers, packaged them in so-called asset-backed securities, and here was the innovation. They cut it up into different slices: high risk, low risk, and so-called zero risk AAA tranches. They sold off the higher tranches with higher risk to pension funds, insurance companies, and these investors were receiving higher rates of interest because of these higher rates of risk of those tranches. Themselves, they kept the lowest or second lowest risk tranches on their own balance sheets. Now, banks are highly leveraged institutions, so what does that mean? They have 100 units of equity, and with this 100 units of equity, actually, they then have customers deposit money, take up loans, up to a factor of 20 or even 30 times the initial equity. They then invest that money into kind of loans to corporations or by buying themselves asset-backed securities which are invested money. But because it's so highly leveraged, even a small loss in capital of where they have their money invested in has a huge impact on their equity. So with a factor of leverage of 20, if their investments only lose 1% in value, then this translates into a 20% loss of their equity. So what happened when the Federal Reserve started to hike rates of interest, because the Federal Reserve was worried about the kind of property prices going through the roof? Gradually, property prices came down, and as they came down, suddenly there was the day of reckoning of the asset-backed securities losing value and the banks suddenly being confronted with the whole loss of their own equity. This necessitated investment by the governments to protect the financial system. But is that only because bankers were greedy? Couldn't there have been something else? In my view, there is a kind of complete disconnect between the innovations which we have on the technological field and the innovation which happened on the financial field. So let's imagine the following. If you go back to 1900 and talk to a physicist who was at work at the time and asked how did for him the world look, it was clear. It was classical physics, Newtonian physics. He had no inclination, no knowledge of quantum theory, relativity theory, and all the modern innovation. It was a much more basic world. In the 20th century, there were these radical innovations, complete paradigm shifts. And if you had asked Einstein, would he have expected that would be possible, he would have said a clear no. Only 20 years ago, none of us would have expected the kind of internet technology to take on or the iPhone applications to be feasible. But let's turn to the financial area. There, if you take textbooks, which are used by students today, and compare them with textbooks published 40 years ago or even 80 years ago, the content is more or less the same. Nothing has changed. We haven't had these kind of radical innovations. This is documented in the following fact. When you go to your bank, go to the ATM machine and get out cash, yes, it's purely digital. But if you go in the background and see how this is processed, it's outdated business processes. International wires take 2 days to happen. If you want to receive interest, you only receive interest for a payment that has been made overnight. You don't earn interest by the second, as is the case if you, for example, have to pay for electricity. So the financial system is based on processes that have been designed when everything was done on paper, and the ideas which are used are those which were prevalent at the beginning of the 19th century. This huge imbalance has had the following effect, that from a technological point of view, using email, modern mobile telephony, we can do business around the globe, and we actually take advantage of that. But the financial system is still heavily rooted in the early 19th and 20th century. So going forward, what do we have to do? We have to be as innovative and as radical in the social and economic sphere as we have been in kind of the natural science area. And it's there that I have therefore described the different initiatives that we should do, and this is part of the other video. But what does that mean for you today? For you today, I think you have to be aware that the second crisis will come. And why do I fear that? The governments have made huge expenditures to salvage the banking system, but they have failed to address the causes which are the root of all that. So because of that, it is only a degree of time until the second crisis hits us, and then I believe that the crisis will be far more serious, because we all will have lost trust in the government, because we think, how can they help us if they haven't been able to solve the first crisis and find a long-term solution? Because of that, I think there'll be a lot of uncertainty. So it's important for you to diversify your assets, make sure that you don't rely on any one individual or institution for protection, and are diversified. The second, and I think that's most important, is let's all of us fight for change and try to do and come up with ideas which make a better world. And part of this is the message of the other video that I have shown you. Thank you, and looking forward to the next update. Thanks.